The worst sell-off in history is coming. There is no doubt about that in my mind. However, the last couple of weeks has set up the ultimate bear trap, and everyone is going to get wrecked this week. One hell of a gaping. What's the crack, everyone? Welcome back by Wholesale. Hope of course you're all well. We're back covering gapings. It's good old gaping. Nothing like a good old gaping. In the Discord, I put a post in yesterday and I just said, look guys, we've been playing it so well. Well done everyone. This all kind of been starting for about a year. We've been talking about it, navigating. We were in the likes of consumer plays because they're the last ones to fall off the cliff. We've done all the technical analysis at the time that said back in 2008, the last ones to fall off the cliff were your consumer staples. We played them, Dollar Tree, Dollar General, and the likes, Albertsons. We played them right up until they went off the cliff. They went off the cliff, then we started shorting. It's just been a great time. Now, we had a couple of bear market rallies. The one that we've just got out of sort of maybe about 2 weeks ago, we did so well. We were buying, riding things up, closing out old dead positions that we just didn't want anymore. We just closed up a load of different things. And the reason some of the stocks that I closed out that I was bullish on, did want long term, that I've just closed out, is because there's better companies now going at discount. When I opened a lot of these trades 2 years ago, I was looking for value. I was looking for stuff that I felt, well, this has got a good growth potential, this is it. But things change. Once you've fallen into the 200-day moving average, once you've entered a bear market, you're allowed to reassess. This game's always going to be about reassessing. So I've reassessed, stripped out money over the last few months, sold all the stuff I could, and then on the flip reverse, I have just shorted this market. I'm in a far better situation. I know a lot of people in the Discord are in a far better situation, and there's actually a lot of people that are genuinely looking happy. People saying, you know, they're glad to find the channel. Thank you for all the help. Damien, my trades have been net positive this year because of your content and the Discord. We've all been chatting about it, and it's not just me, it's not just one person. Everybody's providing input. We're debating, we're being balanced, we're showing one side and the other. There's not one person's right, not one person's wrong. There's people in there that don't short, don't do anything, just buying long, but they're getting comfort because we're telling, you know, it's going to be okay. Look at the company, look at the fundamentals. We're looking at companies in there that do have strong fundamentals, the likes of Argo, blockchain, stocks like that have just continually developed. Give us the reassurances. They're saying, they're calling it what it is. It is a bear market. This is what we're going to do to tackle it, but this is what we're doing to still achieve our goals. It's everything, and it's all of these things put together that really give you the sharpest tool. In that video, we talked about the different percentages, and as you can see here, I brought it up again, 33, 37, in and around that range is your average percentage for a stock market pullback. There's been worse ones, 52% ones, for example. And I've been saying on my channel, not to go completely bearish, but now that we've gotten further down the road, I'm going, okay, well, where is the bottom still coming? Well, for me, the bottom is still gotta be exactly what I said in that video. Apple is one stock that I just felt was very, very high, and the resilience I've taken note of and I put in my Discord, the resilience of Apple has been unbelievable. It is a stock that I am definitely going to be going A and B style in once we reach some sort of bottom. But Apple has really started to go off the side of a cliff now. This is not new. We've been covering this since December, guys, up and down. This is the way the road goes. You get bear market rallies. That's just inevitable. We went right up here. I said in the Discord, we're going to hit the 200-day moving average, and then it's going to pull back. Unless we get above it, I'm not buying bullish. I bought a hell of a lot of shorts in and around these levels, bought the whole way up. The next thing I want to talk about is cycles, and I'm not talking about your bike. I am talking about the economic cycles that through history has shown to repeat itself. Now, you could say previous performance, as we always say on this channel, does not indicate the future, and I take that into consideration here. And I do take everything I'm about to say with a pinch of salt, but when you've got this amount of things all accumulating in the one period of time, it does send the bejeebuses up you. And again, we're looking at always staying on this channel on the right side of probabilities. That is what trading's all about. That is what hopefully this channel is all about. It's about staying on the right side of things. And I don't want to go into it too much because we'll do separate videos over the coming weeks. So please like, subscribe, help me grow the channel and all that if you want to get more information on this here. But we have a 7-year cycle that is about to come this year. We have an 80-year cycle which is about to come this year. We have a 20-year cycle again coming this year, and I've already covered, and I'll share the link to the 100-year cycle. All of these things are all just piling into 1 year, and it's this year. That is terrifying. There is a changing in the world economics. There is a changing in even pensioners. The baby boomers are all starting to retire. There's a whole raft of change coming to this world, and it ends up in one place and one place only, a huge reset and one hell of a gaping. But now let's have a look at actually what's going to happen this week. First thing I want to show you is the RSI. Anyone on the trading course will know what I'm talking about here. This is the 4-hour chart. You can see this is massively overextended. This doesn't happen very often. January, February, April, June. Okay, it's happened quite a lot this year, but it doesn't happen that often normally. It happens and then it goes straight up. And if we put up the actual SPY chart, then this is the S&P, and this will be the same for the Dow Jones. I'm not going to show the Dow Jones, but it is the same. You can see we drew this level of support. This is where it bounced. In the Discord last Thursday, I was saying to people that were thinking about jumping in the shorts, I was saying tempted to buy some here on the beatdown, looking for a jump. The next day, markets in general need a bounce. We are a lot of levels broke today, we gone. Hence why I sold some shorts just in case we do jump. Then I went on to say, definitely be careful, so much beatdown, it could have a small bounce. For anyone opening their first short positions, perhaps consider phasing into the position. And that is exactly where I see it, because I'll zoom in here and this is what I'm going to show you. This area right here is called a gap up. This will gap, bet my life on it. We've bounced up this level and this will fill up. Perhaps more, but at least it will fill that gap. And this is the problem. This is where peak fear is. This is what happens. Everyone jumps in, oh, they watch it go down, they go down, they go down, they go down, and I go, oh Christ, I'm pretty much right at the rock bottom. You know what it is? Look around, I'm gonna go A and B into the shorts. Terrible idea. This is why when the run was happening a month ago, 2 months ago, I was buying my shorts. I was putting in the Discord, and buying because it was going down. Now that we have reached the bottom of this current run, people are going, oh, I'm going to buy in now. Now, it's not going to be the worst thing ever, because undoubtedly, based on everything else that I'm talking about, it's going to have a massive drop, as we've said. But just be careful on this week. Don't jump in on Monday, buy shorts, get wrecked, and then sell the shorts in peak fear, thinking we're going back to the moon, and then watch it all go back down again. That's what this market does. So if you're buying shorts, commit to buying the shorts and ride it up. I've sold some. I'm keeping it. Tell everyone in the Discord, I'm resetting up on Monday. We'll see what way it goes. I'd maybe jumped out too early, but I'd rather jump out early with profits than get wrecked. And that is all you can do with charts. And I'll tell you exactly when to buy and when to sell. It works on probabilities. I could see that we were massively overextended. I could see on the RSI, once we got into this range, which was on the 21st, I take profits, guys. And everyone in the Discord knows this, but I'm talking about everyone else that doesn't know this, that isn't in the Discord, that isn't in the trading course. The people that are watching this video for the first time, don't get wrecked. Don't get wrecked. Get in the Discord. It's $3.99 a calendar month. Nothing ventured, nothing gained. If you don't find any value in it, by all means, try it for a month and move on with your life. But I believe you will find value in it. We've got Craig here putting in a lot of his technical analysis. That's the good thing. A lot of people putting in their different opinions. Unfortunately, if you're bullish, the majority of the opinions the same. It's going down. So in the Discord, I actually put this here. Look at the stocks now that have fell below the 200-day moving average. Just have a look at some of these here. Apple, Microsoft, Google, Amazon, Tesla, Berkshire, Big Buffett, Big Balls can't keep the thing going. Johnson & Johnson just historically just goes up. Visa, semiconductors, Walmart, JP Morgan and Chase, Nvidia, the list goes on. For people who don't understand what that means, it means the trailing 200 days this is the average price, and it is below that. It is below what it has done in the last previous 200 days. It is brutal. This has got to pull back more. The story has not changed since I've done my last video. I still foresee this being in and around a range of about 40% pullback before we find a bottom. Until I get to that point, I'm not going long on anything. And even then, guys, I might reassess and go, nah, this market's got legs for days still. Maybe we're not oversold. Make sure to subscribe to the channel and I'll keep you as updated as best I can. But I can tell you now, if I get down to these types of levels, I'll be buying. I'm not going to try and time it. If I can get it down to that and miss a 40% drop. I mean, Apple from the highs to here, it's only 16% down. It has to go. In my opinion, again, another reason why I'm shorting it, it has to go down to the previous lows. So straight away, I'm looking at it going, well, you've got another 12% drop, but I foresee it going a lot further than that. I wouldn't be surprised if we seen it fall 50%. That's just a really crazy prediction, I know, and the odds are probably against me saying that, but that's just kind of where I foresee it going. So I'd be keeping a close eye on that. One that we've made some fantastic money on is being Airbnb. This has just been phenomenal. So we drew this cup in handle. I was in it long, jumped on it long, read it up. Now I didn't get it timed to perfection, unfortunately. I missed a bit of a rise. I was down about 10-15% at one stage, but I've been averaging down. And then this week, the thing just went, I'll pay you back, 17% down. Absolutely delighted with the Airbnb. Again, all in the Discord, people know I've been very open and honest about the Airbnb. I've been shorting it. I've been red on it for a good best part of a month. But I just stuck to the plan, kept buying. As it kept going up, I kept buying. And ultimately, in hindsight, looking back on it now, it going up and up and up, it actually worked out to be a storm because I got all that money on the way back down. So I'm very, very happy with that. And we're just putting in all our swing trades in here. Look at this, you know, and money is flying up there, being short gains. Everyone's happy. This market's going down, guys, and we're just making money. 19% up, Airbnb short, no leverage. You just short it. There's the sell symbol. You sell it and you close it out when it comes with a buy again. 2.3% times about 5. You know, you're 11-12% in and out, picking things up. If you want to learn how to do all this, trading courses there, £99, guys. The cheapest trading course in the world, and it's not because the value's not good, it's because I'm not about ripping people off, guys. Not about it. Don't want to rip anybody off. Want as many people to understand this. Of course, make a token for my hard work, but I want people to understand this. I want people in the Discord. I want as many people to start changing their mindset and win, because it's doable. We've got to beat the system. We've got to beat this government, because they're going to break us all down. There's going to be nothing left. Only the strongest will survive. ABML is one of our long holes. It's fell below serious support level. That is goodbye Irene. And I'm going to do a separate video on that. Things have changed with ABML, so we need to have a deep dive into that. Let's just have a recap then of the week. The US equity markets tumbled this week. Dow briefly falling into bear market territory. Just take that in for a second. Briefly falling in. There's a hell of a lot more pain to come, guys. Closing out 2002 low as concerns about recession. We're already in a recession. We've entered a recession ages ago. The UK actually put an article out this week. We've entered a recession. Balls to a recession. We entered the recession 2 months ago. Easy 2 months ago. Charts have told us that. We did the video. It's just nonsense. Media is so far behind. See if you spend your life watching Bloomberg or CNBC and Fox, what a business, expecting to get the most latest news. It's nonsense. Some great analysts on it, don't get me wrong, and a great overview of just the general society. But see, to get a step ahead of the market, watching those sites, it ain't gonna happen. It just ain't gonna happen. You're never gonna be ahead of the curve. We did have our basis point that came in to 75. The UK, thank the bloody Lord, only went with 0.5%. That saved me a clean fortune in my mortgage. And I have a cracking mortgage video. It's gonna help out a lot of people. I've recorded it, it's banked, it's done. It'll be out on Monday. That's going to be very good again, so subscribe if you want to watch that. Not going to talk any more about last week. It was just a bloodbath. Here's our chart update. Brutal. Just brutal. Commodities still up as we expect. Dollar is throbbing. Another thing me and my friend were talking about last night, we were going, it doesn't feel as bad this time like it did in June. Doesn't hurt as much. And I'm like, well, my strategy's completely changed. He's just still dollar cost averaging. That's all he does. And he's dollar cost averaging away. And he goes, it doesn't feel as bad. And I'm like, well, if you look at the exchange rate, you're up over 11%. When you look at it that way, you know, that's a hell of a lot of saving that you've made there. You've made that on the exchange rate. Some of my Forex trades and my longer holes, it's over 20%. It's actually serious. If that was the term flip reverse and the exchange rate got better, one hell of a game for us in the UK anyway. Here is the events calendar, the one, and you can have a look at these here yourself and appreciate this video, so maybe you're running on a wee bit. For me, the main thing I'm interested in, because the next thing that I'm looking to capitalize on is going to be the housing market. Now, it's not happening yet. That takes a long time to filter out, really does. I'm not at the point where I'm even really going to talk about it too much, but I'm just keeping a close eye on this. The Case Shelter Home Price Index. That's going to give us an idea of what the American market's saying. That's ultimately one of the last things to fall. The reason it's the last thing to fall is there's just a backdate. It takes time for a house to complete. So when you're buying something, when you're agreeing a house, it could take 2-3 months before you actually get into that house. So whatever's happening, it takes time for that all to filter down and actually impact things. And the other thing that you want to look at is this Consumer Confidence Index as well. Things are going to win on this week. Premier African Minerals is showing good strength. We are around this level. Some of us sold, some of us didn't sell, some of us tried to sell. It's just hard to know, is it going to be able to push on? If it does push on, you know, you're probably looking at about a 20% increase there. But if it doesn't, it could fall back down to these levels. Just watching it closely, a lot of great news coming out. Prem has been a dream. So we talked about it, it's roughly about 3.5%, and I'll bring it back to you this year. This is what I was saying. This is where you have the Fed always trying to chase the bond market. It's always lags behind. Everything happens first, then the Fed try and do it. So it's trying its best. It increased interest rates, but look what's happened. We went from 3. This is not even joking. Like, we went from 3.5-ish area. This thing has went on another 22%. It is flying. This is not what you want. What this means is the Fed are going to have to keep interest rates even higher to try and play catch up. That means there is the mother of all gibbons coming. For the love of God, protect yourself. If you have anything green in your portfolio and you 100% are invested right now, for the love of God, consider taking some money off the table and just sit tight. But that's it. It's none of my business. Whatever you do is what is up to you. But me in the Discord, the idea is 50% cash, jump in and out of day trades, keep whatever we have in the long hole / shorts, and just let it go. Like, and wait till we get close to the bottom, the things that we've talked about in that video. So look, guys, tread carefully. That is the video. I'm going to share the link to that video because there is a lot in that where we talk about the market, we talked about the Fed, we talk about the governments, we talk about everything that is going on in this world and the grim times that are coming and the way you need to start changing your mentality if you're going to survive this. Hopefully that's not too bearish. I'll catch you in the next one. Please like, subscribe, help me grow the channel. Peace.